When AT lines form ladder patterns, they offer great opportunities to trade. But not all AT ladders should be treated the same, and you need to keep this in mind when you're looking at your chart. So let's take a look at what I mean by that in the following. Not all AT ladders should be treated the same. What I mean by that is an AT ladder that forms off a low or high of a day or a time period tends to have the greatest force or momentum behind it, which means that you can jump on a ladder when you see it comes off a high or low, because the market is now shifting from one episode, as you can see this in Dalian 4-hour chart, to a new episode to the upside. And what it's doing then is it's squeezing out not only the shorts from the prior episode, but it's looking to find a level that brings in sellers to restore some sense of balance. And as long as the market's in balance this way, and it usually comes off that lower high, the market in this case, for example, in Dalian 4-hour chart, will be looking to buy dips. So you can see on this ladder up, any attempt to retrace was short-lived. Any blue line was short-lived, and the market started moving up. So just keep that in mind when you're trading a ladder. I'll show you another illustration in the same currency. This is a Dalian 15-minute chart. You could see the day started over here. You had a directional indicator, and all you had were red lines dominating until you finally ran into resistance. So if you would have come in here off this low and bought anywhere along this pathway and put a stop below the most recent red amazing trader line that preceded a new high for this episode, you would have been in with the market flow, with the market looking for a level to restore the balance in the market. The imbalance now tilted to the upside, and therefore you'd be buying dips. And you can see the power of this move over here. Now if you go down over to the 5-minute chart, you can see it forming, I guess, a directional indicator over here, but it's within the day's range. And this market needs to take out the high of the day to run any stops, unlike when you're moving up. And each pause, there's somebody coming in to sell, and when you make a new high, you're kind of stopping them out. Here you have to take this high out. So this move here, although it may test the upside, does not have the power of this move. And therefore this move over here that I showed you on the 15-minute chart has a higher probability of succeeding and more protection when you're buying the dip. So just keep that in mind when you're looking for ladders to trade. Try to find one which is off a low or a high of a day or a time period, because you're going to have more power in it, and that's one you can jump on a little more aggressively than one that's trading within the day's range, where you have to take out the high or low of the day to trigger any fresh stops. And just to add why you would be looking to buy this ladder more aggressively as opposed to selling this ladder up here is because it's consistent what you would have seen in the drill down, where, for example, in the 4-hour chart I showed you rising red lines. You would look at the 1-hour chart, you would have seen rising red lines. So you would have been more aggressive buying this ladder, trading for the long side, than you would be if you were just having a directional indicator in the upside, given momentum seen on longer term charts.